Hello everyone, I am Lokiya. Now let us revise Essay 550, Related Parties. First and foremost, who is a related party? A related party is such a person who is defined in the applicable financial reporting framework. Where the AFRF is quiet, then it means such a person or other entity which has control or significant influence either directly or indirectly over the reporting entity. It also means the other entity which comes under the common seal as of the reporting entity. Here common control means common controlling ownership, common key management as such. So where a person or an entity falls under any of these category would be termed as a related party to the reporting entity. Regardless of a transaction being carried out with these related parties, the auditor is required to carry out these procedures. So first comes the risk assessment procedures and the related activities. The first part of the risk assessment procedures is understanding the entity's related party relationships and transactions. For this, the auditor shall inquire the managements regarding the identity of the entity's related parties, including changes from the prior period, the nature of the relationships between the entity and the related parties, and whether the entity has entered into any transactions with such related parties during the period, and if so, what is the type and the purpose of such transactions. Besides this, he shall also carry out his own procedures in order to identify any such related parties and whether they have been properly accounted and disclosed, whether the related party transactions have been properly authorized and approved, and whether any transaction with the related parties have been carried out which is outside the normal course of the business. During the audit, the auditor is required to remain alert throughout the inspection of the books of accounts so that any indicators of existence of related party relationships or transactions might be found which the management has not previously disclosed to the auditor. So for this, he shall in particular inspect the third party confirmations, the minutes of meetings of shareholders and those charged with governance, and such other records or documents as the auditor considers to be necessary. The auditor shall also take into account whether any significant transactions have been done outside the normal course of business. If so, what is the nature of such transactions and whether related parties are involved in such transactions. All the informations obtained regarding the related parties shall be discussed with the engagement team. So once the related party relationships or transactions have been identified by doing all these procedures, the auditor shall first determine whether they are significant or not. He shall also identify whether any fraud risk factors are associated with such transactions. Next comes the responses to those assessed RMMs related to those related parties. In a situation where the related parties have not been previously identified or disclosed, the auditor shall first confirm the existence of such related party transactions. Once confirmed, he shall then promptly communicate the same to the engagement team. Then he shall request the management to identify all such transactions, and he shall raise an inquiry as to why the entity's controls have failed in order to identify such related party transactions. He shall perform substantive or appropriate substantive audit procedures to such newly identified related party transactions. He then needs to reconsider the risk factor, and in case where the non-disclosure by the management appears to be intentional, then he shall evaluate the implications of such. So these are the procedures for previously unidentified or undisclosed related party transactions. What happens in case where a related party transaction has been carried out which is outside the normal course of business? Where any contracts or agreements, if any are available related to those transactions, the auditor shall first inspect those contracts and agreements to evaluate whether the transactions suggest that they have been entered into engage of fraudulent financial reporting or to conceal a misappropriation of the assets, or where the terms of the transactions are consistent with the management's explanations, and whether these transactions have been properly accounted for and disclosed in accordance with the AFRF. He shall also need to obtain evidence regarding whether these transactions have been properly authorized and approved by the respective authorities. When the management has made an assertion in the financial statement that the related party transaction was conducted in terms of arm's length transaction, then the auditor shall obtain sufficient appropriate audit evidence about the assertion. So these are the responses to be done by the auditor. Next we have reporting. In forming an opinion on the financial statements, the auditor shall evaluate whether the identified related party relationships or transactions have been appropriately accounted for and disclosed in accordance with the AFRF. He shall also evaluate the effects of the related party transactions, that is, whether it prevents the financial statements from achieving its true and fair presentation or cause the financial statements to be misleading. And finally we have written representations. The auditor shall obtain written representations from the management that they have disclosed to the auditor to the identity of the related party transactions of the entity which they are aware of, and they have appropriately accounted for and disclosed such relationships and transactions in accordance with the framework. So these are the requirements laid out by SA 550 with regards to related parties. I hope it was useful. Thank you for listening.